Today we're going to look at the accounting process. By the time we're done with today's class, we should be able to understand the accounting cycle, the steps involved in the accounting process, how to post transactions, the accounting equation, the double entry system. This is what we did the previous classes. So we want to learn how to balance accounts and how to extract the trial balance, and perhaps learn how to make end period adjustments. So the rules for bookkeeping were as follows. A recap. To increase assets, what do we do? We debit. To increase expenses, we debit. To increase capital, we credit. To increase liabilities, we credit. To increase income, we credit. And the opposite reduces them. So this is what we learned the previous class under the theme perils. So we said perils works on the assumption that you increase the following. On the debit side, all purchases, all expenses, all assets are to be debited for them to be increased. All revenues or capital, all liabilities, all sales, income to increase them, we credit. So this is the principle we've been looking at. We had the accounts, ledger accounts that we did with the following solutions. So we need to now learn how to post these balances to the trial balance. So trial balance is simply a list of balances. And the job of the trial balance is to ensure that these balances what? Balance out. So we have a share capital account, 5,500. So we need to close this account at the end of the month. So this was July 1. So July 31, to close this account, we'll bring the balance what? Carried down. Should be equated to what is on the left side, should be equal to what is on the right side. So we have 5,500. So here, 5,500. Then this is what will go to the opposite account here as the balance brought down. That is 5,500. So meaning the capital account in the trial balance will have a what? A debit, a credit balance. That's the closing balance there. So what you do now is when you go to your trial balance, capital will go to the credit side with 5,500. So we go to our trial balance. Here we have what? Our debit. And here we have our what? Our credit. So capital, 5,500. So in short, if you have an account like we had here, this closing balance here, 5,500, the balance brought down will actually be on the same side, on the credit side here, 5,500. So for the bank, look at the bank here. The total on the debit side is what? 5,500. And the total on the credit side is what? 850 plus 800 is 1250. The idea is that the left side and the right side must have the same total. So you subtract 5,500 minus 12,050. How do we get the difference? I don't have a calculator, so we'd do to assist if you have a calculator there. So 5,500 minus 450 to give you 4250. For this guy to balance up, we need what? 4250. So this is a balance. Uh, Carried down. The same amount in the right opposite here to be a balance brought down. So the brought down balance is what we post to the trial balance. 4250. So this is bank. And when we go to our trial balance, bank, we're going to what? Put 4250. So we're closing up these balances. Purchases, like I said, if you have one balance, it will obviously go the difference and come back to where it is. So our closing balance for purchases of what? 540. So on the debit side, purchases 540. And it's in tandem with our payrolls. You can never have a purchases closing balance as a credit. It should be a debit. Then we have sales. It is all on one side as well. So there's a credit balance. Just total up these ones here. 0, you can carry 1, 630. So our sales is 630. So you go here, sales, 630. Wrong way, cancel. We have 450 here and 180 here. So you give the side that has a less amount because both sides must be the same. What's the difference between 450 and 180? 450 minus 180, 270. Meaning here we have a carry down of 270 and brought down of 270. So Chongwei has a debit balance of 270. Are you understanding? So those Chongwei and data. Any questions? 270? That is Chongwei. But sometimes what happens is that you may have different data as there's Chongwei, there's another individual you can control. You can make a control account and you can power them. Okay. All data have a debit balance. We have Trade Kings with a credit balance of 540. Who's Trade Kings? Trade Kings is a creditor. So we go creditor 540. But we may have another creditor like a Toyota. You can sum them up if you want. So here, 540. So can you tell me rent? What balance do we have for rent? So we put our Trade Kings credit at 540. Then we have rent there. What do you think the balance will be for rent account? It's a debit balance, right? Of 450. So rent is an expense under perils or expenses of what? Debit balance. So rent 450. I hope you're following. This is what we call balancing off. And you do the same for the remaining accounts. Cash account, when you have a double sides there, what are we doing? The first thing, you total up both sides. This is 980 this side. Put 5 plus 67. 12 carry 1, 112. So the side that has less, you give it. So 980 minus 112. What do we get? 980 minus 112. 868. So this is what? Write down. So our balance brought down will be what? 9868. So cash account will have a what? A debit balance of 868. So put cash 868. six, eight. So help me here. It turns inwards. What do you think? Will what do you think will be the balance? What do we have? So here we already have a debit balance. We already have a debit balance there. So our closing balance will be what? Our closing balance will be 180 for returns inwards. That is a debit balance. So we're looking at the comprehensive statement here. So we have 180 as our returns inwards. So we'll just put 180 on the debit side. Then insurance is only on the debit side, 45. So we're going to have insurance here, 45. Insurance, 45. So the essence here is that our balancing off must be based on the principle of duality, and we are balancing off based on the transactions where it is more heavier. So if you have one transaction on the left hand side, so it simply means that you're going to get the closing balance as it appears. So this is how we balance off these accounts. The returns inwards, the insurance account. The whole job of the trial balance is simply to do what? To ensure that you close off these balances. So a trial balance is a list of balances. So these balances that we have been seeing here are just being posted, the trial balance. At the end of the day, they must balance it. On the debits must be equal to the credits. Debits must be equal to the credits. So everything should be done with the same principle. Toyota van has a credit balance, so it should be that Toyota should be a creditor, 2,500. Van account is an asset, so you could just post this 2,500 to our trial balance. Sundry expenses account also should be posted, then you balance off and add up. So the final picture that you're going to have when you balance off will be something like this. The debits and credits will look like this. Then you total up. So these are the accounts that we've been balancing off. So what is the total on the left side should be the total on the right side. So this is how we do the balancing off. So our next session in financial accounting will be now how to post to the income statement and to make adjustments. All right.